Hi crypto kings and queens, welcome to my channel. My name is Natalie. In today's episode, I'll show you why we could potentially see the market being bullish this week again. Because remember, last week we did close with one inverted hammer against the support at 18,019K, and we're closing this week with another inverted hammer. On the lower time frames, we can already see how the market is preparing itself. If we're breaking above 19,670, this could be one big confirmation that we're seeing the market continue even more to the upside. Combining that with DXY is right now retesting a 20-year-old price level, and this of course will give some reaction inside the market, which now looks like we are retesting a lower high level, and this can take us back down to lower targets. And combining these two together, of course, will give you an extra confirmation that the real move is actually on BTC to the upside and on DXY to the downside. Don't forget, I'm no financial advisor. You need to look up everything yourself first, but please continue looking at this video and I'll show you what the high probabilities potentially can be during this week. We're starting off with Bitcoin on the weekly chart, and as you guys can see, we're still in this sideways market. We're never getting ourselves from, as it feels like. But last week, remember when we closed with this inverted hammer, we're closing with another inverted hammer this week. We are closing this one in 10 hours, so it's a lot of hours left. A lot of things can happen, of course, but it's Sunday. But if we close this weekly like this, we have two inverted hammers once again at the support. Remember when we've had that the last time, we saw this support right here at 37,700. We had 2 inverted hammers, then you saw this bullish momentum to the upside. So the same thing that I was talking about last week with this inverted hammer, we were bullish, market pulled back down, of course. If we go down to the lower time frames on the daily chart now, what we can do is that we'll drag a Fibonacci from 18,840 back up to the high, and that is at 20,465, which gives us the Fibonacci levels right now between 19,660 and 19,470. We have the take profits around 20,880, and we have the other one at 21,450. So if we just take away the Fibonacci, and if we see that, if we go down to the 4-hourly chart right now, what could possibly happen if we just drag another support trend line, which is representing the downtrend? If we see that the market is breaking above 19,665, and we potentially see the market give us the higher low level, remember now that if the weekly chart is closing with a inverted hammer, which is the bullish reversal pattern to the upside, then that could be when we go down to the lower time frames, this is the type of movement we can possibly see the market giving us. We see the market break above 19,655, potentially create a higher high, and then create the next higher low, and that can be the beginning for the market to continue to be bullish, and that can take us back up to 20,880 or 21,450. On the lower time frames on the 1-hourly chart, you can see how we pull back down to the support again. If we're looking at the weekly, we're at the support that you've seen the market, and this support is between 19,290 and 18,835. We saw the market is still creating a low, higher low, potential higher low now, because what we're looking at is the bullish potential scenario that can happen on BTC. But if we see, of course, because two scenarios can obviously play out, we can also see the market continue to the downside, because as you guys can see that we are still creating lower lows and lower highs, and if we could continue even more to the downside, we can still pull back down to the support as I spoke about around $18,800. You've seen how many times the market has been around this level before, and that is why we could potentially also see the market have another drop. If we're combining this with DXY, we are right now retesting a 6-month monthly lower high level that we've had way back. This is 20 years ago this happened on DXY. This is a 20-year-old level that we're retesting, so I would not be surprised if we also see on DXY have some rejection around this level. You can already see, and this is between 113.250 and 116.455, and you can see how the market gave us one rejection already. Market pulled back down, gave us a higher low level, but because now what we need to think about is that DXY is retesting a very strong level, and what we're looking at right now between 112.460 and 113.70, this is a lower high level. So I would not be surprised if we also see that the weekly chart on DXY, we have this huge wick that you can see. I would not be surprised. We just might have some movements to the upside, but I strongly believe that this week on DXY will be bearish because we have the rejections at the moment. The overall picture, we're of course still in a uptrend, but on the lower time frames, we just might to see the market give us the pullbacks, and this can be the beginning for the market to do that. So we can also drag a support trend line, and you know, if you go down even more to the lower time frames, you can all see that the market is creating high low, potential high, and the last higher low is around 112.200, 300. If we break below this level and create another high, this could also be the bearish reversal pattern, the head and shoulders, because we are inside the Fibonacci levels where we can expect the market to drop from. So combining that with how Bitcoin is moving, how DXY is looking, it looks like DXY is pulling back down, and we can reach 109.640 and 108.500. So this is also the higher low level we can reach because we never had the power to do that before. So everything depends, of course, but we need to understand what type of levels we're looking at the moment, because as I said, just because we are in an uptrend, that doesn't mean that on the lower time frames you'll see bigger pullbacks. And the same thing here when we're looking at Ethereum on the weekly chart, we're closing with a inverted hammer potentially now on the weekly chart. And if we go down to the lower time frames, you can see that we are consolidating in between 1,250 and 1,400, 1,370. So the market is in a sideways market, but we can slowly and steady see how the market is creating higher lows. And based on that, we have the weekly chart. The weekly candlestick is closing like now with high probability is closing with the inverted hammer. This could be the beginning for the market to continue up, and you can see how we on the lower time frames now, but this is on the daily, so it's not so much lower, but we are retesting right now a higher time frames Fibonacci levels or a higher low level Fibonacci levels, and you can see how we are actually respecting this one so much. So another thing that we're going to do is that we'll just add a resistance trend line, and we can see how the market is breaking above it at the moment. Another thing that we can do if we see that the market giving us a pullback on Ethereum is that we can add some extra Fibonacci levels just in case to see where we could potentially see the market retest. And if we're not retesting these levels, well, that's just gonna give us another confirmation that we're not pulling back down to the to the upside. We're actually continuing to the downside. So it's really good to use these levels as guidelines to what potentially can happen in the market. So if Ethereum now continues to break down, we can come back down and retest 1,322 or 1,320. If the market continues back down even lower, we could potentially retest 1,315 or 1,312 for the market to give us the higher low and also give us the beginning for the market to continue even more to the upside. Based on these Fibonacci levels, we can reach 1,336 and 1,347. But at the overall perspective, if we go up to the higher time frames, what we can do on the weekly chart is to use the Fibonacci from high to low which gives us Fibonacci levels around 1,500 and 1,560 for if we see the market now being bullish in the beginning of the week or around whenever it's supposed to be, but these movements that we do have. Because, and if we're breaking above 1,375, well, that's going to give us the confirmation to go to higher targets. But of course, as always, we need to focus on what's happening on the lower time frames. We did break the high low level. We are right now breaking the resistance. So everything depends on, are we going to come back down and retest these Fibonacci levels are as higher lows, or will we see the market break the level around $1,300 created as the next lower high, because the market is still in a downtrend, and can that be the beginning for us to pull back down to the support again around 1,240? So, but as I said, on the weekly chart, we have the guidance to see if this could potentially be where we continue to see the market being bullish. I strongly believe that based on DXY and based on the patterns and market structure that we have on BTC and on Ethereum. Don't forget that you can also receive a bonus on BYBIT up to $4,380. Definitely my favorite one when we hold our position for a longer time. We have low fees, but the best thing with it is that you have everything on the charts while you're taking your trades, and that is why I love BYBIT so much. But they also give out other bonuses, for example, if you use your stop loss for the first time, etc. So they give out bonuses to you guys. Claim the bonus and start to use the best platform ever when it comes to cryptocurrencies. Thank you everyone for looking at this video together with me. I hope you did enjoy it. Don't forget to subscribe to the channel, hit the notification so you know when I am live tomorrow morning. Make sure that you are on my London session live stream. I also have them around New York session when the market is a little bit more volatile. Until then, I wish everyone a great day. Okay, have a good day. Mwah! Toodles!